In today's episode, I'm going to talk about the top 3 stocks that might do really well in 2025. Now, if you look at what is happening with the market, we have seen that market has hit an all-time high of 23,000. We have also seen a lot of Adani companies started to go up again. So basically, if you look at the speculation, we believe that the majority has already been crossed and BJP has come back into power again. So all the favorable stocks have started to go up. But looking and keeping all of that in mind, and also keeping the BJP manifesto that we did a beautiful video on, you should check it out if you haven't. Looking at all of that in mind, I am picking 3 stocks that I feel should do really well in the next 1 year, right, in 2025. The first stock that looks really well right now is APAR Industries. Now, APAR is trading at 8,000 rupees, so yes, it is slightly expensive. It is sitting at 32,000 crore market cap. But what is interesting is that APAR is still sitting at 39 PE when the industry PE is 54. Now, why APAR Industry is poised to win? Mainly because they are now helping 2 sectors win, right? So APAR basically gives a lot of wires and other equipment. They are the largest global manufacturer of transformers, oils as well, and they're also doing really good thing in the renewable energy, where they have a cable manufacturing business for renewables in India. So if you actually look at it from a very weird perspective, transformer theme is doing really well because of green energy, so they're winning there. They're also providing a lot of cables, high tension cables to the renewable energy in India, again for transformers. They are also one of the largest players when it comes to giving equipment to the railway industry as well. So if you look at their clients and the industries served, they're literally in all the trending sectors that are there in now. And if you also look at TV in the recent past, they have started running TV ads as well, moving towards the B2C arena. They're not very big on B2C, but now they're moving slowly into B2C arena as well. So if you look at this company, they have 55% domestic sales and approximately 45% export sales that is going on. So what is interesting about this company is that yes, it is trading at 39 PE. If you look at the year-on-year results, they have been doing extremely well right now, and it has been going up. And the management is also giving very strong guidances and very good guidances as well. That is a big profit advantage here. Their reserves and borrowings are also perfectly fine, so the debt to equity ratio is also very good. And if you also look at the stock price, it is going up. Now there is a saying that, okay Shashank, what do you mean this has already gone up so much, it is not going to go up again? I keep saying that everything at one point is at an all-time high and it breaks all-time high. It was all-time high when it was here, it was all-time high when it was here, it was all-time high even at 5,400. So if you have that kind of a thinking, at 2,300 you would have never bought, saying Shashank, it's all-time high. But when the stock market falls down, you don't buy because you're scared. So I would say that there is still a long way to go. And why do I say that is because this industry is not over yet, and assuming that BJP has come back into power, this industry is going to continue to do really well. It's also a very low float company. What do I mean by low float? That the public shareholding is only 11%. It is constantly falling down. That means the DIIs and the FIIs are picking up heavy stake in this company, right? So that is one thing that you should definitely observe. Now the second thing is, okay, you might say Shashank, this is too expensive, I don't think I can buy this company, right? No problem. There are some proxy companies that you can look at. Apart from this, there is KEI and there is also Polycab. Sadly, look at this. All the wiring companies are 6,000, 4,000, 8,000. So a very high chance that they'll either do a split very soon, or they might do a, what do you call that, bonus issue very soon. Split seems more likely because they have 10. This guy also only one split he can do, and this guy has not split till now. So it might come, or a bonus might come. Now Polycab is obviously sitting at the topmost position. See, as he's in a 56 PE ratio right now, again doing really well. Again, the theme is playing out, and it is constantly going to play out because Polycab also is in the home industry space, and home industry space is also doing really well. KEI is also there, sitting at 66 PE. So you see, I'm not very comfortable with KEI only because it is the PE ratio slightly uncomfortable. For the same market cap company, I'm getting 39 PE over here instead of 66 PE. So that is where my hesitation comes into the picture, right? And if you look at the profit and loss of KEI, they're making 8,000 crore profit with a 581 net profit in 2024. And if I compare that to this guy, he's making 16,000 profit, which is double of KEI, and he's making 825 crores, which is again almost 1.5 times what KEI is doing. So I would say, why is KEI valued so much, right? Why is it 66 and this guy is at 39? So I believe that this guy should not be 66. Definitely, it is not going to go to that valuation, but at least 45-50 is what I think APAR will continue to go up, and he is doing really well. So this is the industry that I'm looking at right now, which is slightly bullish. The next company, and you might get irritated when I say this company, but weirdly and funnily enough, next company is TCS. Okay, now understand why I'm talking about TCS, right? it is giving you a nice opportunity right now. Why is it giving you a nice opportunity? Because the entire IT sector has taken a hit, and IT sector will come back, always comes back over time. It is taking a small hit right now, but what people are predicting, looking at the commentary that is going on in the market, by next year, now they're all cutting guidance. That is why HCL, TCS, Infosys, everyone has constantly been going down, right? Even if I show you HCL, you will see that HCL has also gone down quite significantly. In fact, HCL has gone down from 1600 to 1300, gone below 200-day moving average. Whereas TCS is almost not gone down that much compared to them, because TCS is a heavyweight and they have more diversification compared to Infosys, compared to HCL, and mostly compared to Wipro. Wipro has just gone out of the track, right? So if it was up to me, getting at 29 PE right now, if you look at the historic PE, it is currently at the median right now. 10-year PE and 5-year PE is looking really good. I would just start accumulating this as much as possible, right? Because whenever it falls like this, it is like an opportunity for me. It will not give you returns instantly. Maybe in the next 6-7 months, it won't give you. But then when it starts flying, it will start flying like there's no tomorrow, right? So again, this is a very safe bet. And I feel that the IT slowdown is very temporary right now. It should turn around and it should do really well. Now, the third industry that I'm very bullish on is the energy industry. Now, energy industry has a lot of players in the market, okay? It has the top players who produce energy. It has middlemen who actually provide proxy companies that actually give all these other stuff to the energy companies as well. But me personally, I have only 2 companies in my radar. One is Tata Power and JSW Energy. Both are quite bullish right now. Again, mainly because the group backing is huge and JSW and Tata are both good. Only thing is the PE ratio. Again, if you look at JSW, it's at 60 and Tata Power is at 40. Even if you look at forward PE, I think JSW is slightly on the premium side, but it has been doing well because of a couple of growth triggers. And I'll tell you what the growth trigger is. If you look at the sales, definitely doing really well, and it's a profitable company. And it also, it also gets a good premium because it's from a big group. Same with Tata Power, no problem here at all. If you look at Tata Power's 3 years chart, 5 years chart, it has been giving good result over time, right? Similar profitable company, no problem with the profits at all. But if you had to ask me, I would be more safe from a P ratio perspective in Tata Motors. Boss, to be honest, I would buy both if it was up to me. And if I go down and look at JSW's PPT, investor presentation, there's something very deep inside this that I would really like to show you, right? What is very interesting here in JSW is, and this is something that you guys should all do, look at this. Recently, in 2024, JSW raised 5,000 crores of growth capital to qualified institutional placement. 5,000 crores. Now, this money is not to put achar and sit down, right? 5,000 crore is going to start being used to build the entire energy infrastructure that they have. And if you look at JSW's another plan, when they win bids, they directly win heavy bids. Like, look at this. One renewable energy bids of 3.4 gigawatt. They don't work in megawatts. They directly go in gigawatts, and they're quite big. But these guys still do a lot of thermal power plants as well, which is basically your energy drain kind of a system, right? Whereas Tata Power has come out with a new statement, and they're very clear, these Tata guys. What is Tata Power saying? That by 2050, we are going to be 100% green. We are not going to make any more thermal plants. We are going to go completely green, and there is a reason why they want to go completely green as well, right? And I'll show you why they want to go completely green. Right now, they have a mix of thermal energy and green energy. As you can see, 60% is thermal and only 40% is green. Eventually, they want to make this 100% and make completely green, and I'll show you why. If I go down and show you segment business, look at this. This is the segment business, right? Thermal, hydro, and coal and shipping. These are all the bad ones. Actually, coal is what they're majorly in, thermal and coal. And if you look at this, they make 18,000 crores of revenue. Actually, let's look at the 19,000 crores because this is FY24. They're making 19,000 crore revenue, and they're making a EBITDA of 3779, and they're making a PAT of 2112. Okay, so even if I just look at this, just keep this in mind. Now look at the renewable energy space. They're making 10,000 crores revenue, and they're making 3,400 crores EBITDA. So what does this say? 10,000 crores mein 34% they're getting EBITDA margin, 34% EBITDA margin from renewable energy. And if you look at from the thermal and coal, they're making 20,000, double the revenue here, and they still make the same amount. Means 15% EBITDA margin. So by the time it goes into PAT, it is quite less. Whereas this guy has a much better EBITDA and PAT margins if you look at it from that perspective, right? So that is why they want to go so deeply into energy and this energy business. Now transmission automatically works when renewable energy starts working. Transmission works. Here they're operating almost at 12% EBITDA margin, and they're again doing really well over here as well, right? So this is something that I'm very interested and very bullish on, because they are going to say that we are already going to be 56% capacity from clean and green, even though we saw only 40 over there. They won so many orders that by the time they're done, they're going to have 56%, and they want to take it up to 100% because they want to be carbon net zero by 2045. So this is what they're going to do, and they have really ambitious targets, and I feel that these guys will fulfill their ambitious target demand as well. So if you ask me, these are some really good companies that are going well. If you ask me from a lower end perspective, yes, because these are big companies, 1 lakh crore, which is JSW, and Tata Motors is also 1,42,000 crore. There are some smaller players in the game. I think KPI is doing really well. Okay, at 11,000 crores, he's doing really well right now. He also raised a big QIP. I think Inox Wind is also giving very aggressive targets right now, sitting at all-time high. So if they actually go with these high targets, I think it can do really well. Another company that's coming from nowhere is CG Power. So CG Power is actually a Murugappa Group company, and they are also now similar range of JSW and Tata, but their P ratio is unbelievable at 116 because it's flying. But they're leveraging a lot, and they're suddenly becoming hugely profitable, and they're suddenly coming. It's a turnaround story, right? But again, it's a little risky, so I would not take a massive bet on this. But if you ask me, wire industry, IT, you should start capitalizing on all the companies that have fallen down. Persistent has fallen down, TCS has fallen down. I would not personally go for HCL, Wipro and Infosys because they're getting screwed big time, but I would definitely go for all of these companies right now, right? Again, once elections are over, I'll make a fresh video to understand what is good and what is bad. Don't worry about that. But this was just like a breather, and I took some time to come back on YouTube because of some personal reasons, but now I'm back, so I'll keep posting more and more videos. Okay, awesome guys, this is me, Shashank Guruppa, signing off. Take care, see you guys, bye.